Right, hi guys, this is Adam Khoo here. So in this video, I'm going to be talking about what are the best currency pairs to trade on any given day. So that's the most common question that people ask me. So I'm going to answer that question in this video. Now, what do most amateur traders do? What they do is they look at different charts and they go through all the different kind of currency pairs. So they look at Euro USD, Euro Yen, Dollar Franc, so on and so forth. They're looking at all the charts and they get really confused, like which chart should I focus on? And what they're doing is they're looking for specific trade setups based on technical rules. So let's look at some of the most common trade setups that you probably learn in books or courses or videos. And well, it depends, are you a trend trader or counter trend trader? So if you're a trend trader, you're following the trend. And if you're following the trend, you usually enter either on a retracement or on a breakout or some combination of both. Okay, so in other words, if you're looking for a currency pair on an uptrend, you're looking for retracements, right? So which means the price goes up, retraces, goes up, retraces, goes up, retraces, and that pattern continues. So this is known as an uptrend. So usually you're looking to enter during the retracement when it hits some kind of level of support. So again, different traders have different preferences. Some traders, they look at the moving average, some kind of moving average as a support level. So when it retraces and touches the moving average, they buy, right? They buy. Or some people look at trend lines, right? They draw a trend line and touches the trend line, they get in. Some people, they look at Fibonacci, where, they says, okay, from A to B, if it retraces to 61.8% Fibonacci level, they will enter, right? So whatever you do, basically these are called retracement entries because you're entering during a retracement. So that's one way of entering. The second way of entering is entering on a breakout. So which means that on an uptrend, it goes into some kind of a consolidation pattern. Okay, so there's some kind of a level of resistance like so, and you're waiting for a break of the resistance, and that's the best time to enter the pair before it starts a new uptrend. Or again, some traders, what they do is they wait for a break of a resistance level and they wait for a retracement back to that level. So this resistance becomes support, breaks the resistance, comes back to support, tests the support, and when it continues the trend, boom, they are in there for the ride. Okay. On the downtrend, it's the opposite. So on a downtrend, traders look for the currency pair which is trending down, and they enter on a retracement, right? So they wait for it to retrace, and they enter on the retracement. So again, they want to see some kind of resistance level to confirm the entry. So it could again be a moving average that they're using, or could be a trend line, or a level of support, or Fibonacci, 61.8% retracement. Different traders look at different things. I like to look at everything. I like to look at conflict. So for me, I enter when it hits a moving average, hits a trend line, hits a Fibonacci level. I've got all the stars aligned, and I go short and I take the trade all the way down. Similarly, on a downtrend, some traders, they enter on breakouts, right? So again, it's going down, and they see that it's forming some kind of a consolidation. So there's a level of support over there, and they wait for it to break the support, and they go short on the breakout, or they wait for it to break out and retrace and test that support has become resistance again, and they short the moment they see some kind of candlestick pattern, like a bearish candlestick pattern, and they short it all the way down, right? So that's what most amateur traders do. They look for these patterns on currency pairs every day. Now, let me share with you what professionals do differently, especially those institutional traders at the banks. They don't just look at currency pairs. What they do is they look for, at any point of time, the strongest currencies, and at any point of time, the weakest currencies. And they always like to buy the strongest currencies and sell the weakest currencies. And they find the pairs that allow them to do that. So how do you find the strongest currencies and the weakest currencies? So you got to use the right kind of indicator. So what a lot of these banks, they do, they have got their own special proprietary indicators to measure currency strength. And there are a couple of them in the market which you can find and download. But in my company, we have developed our own proprietary tool to measure currency strength. So let me show you what it looks like. And of course, all my students, they get this for free as part of our course, as part of our community. So this is called the currency strength meter. Let me just put it in right now. Okay, there we go. So over here on the bottom left, you can see the currency strength meter. So how does this work? So notice that I'm now on H1. Now again, of course, whether a currency is strong or weak depends on the time frame. So on a certain, like on H1 time frame, this currency could be strong, but on a 50-minute time frame, it could be weak. So it depends on the time frame, right? So based on the H1 time frame, you can see currently on the H1 time frame, what are the strongest currencies? You've got pound, Aussie, and euro. These are the strongest currencies. And then you've got New Zealand, dollar, and franc. And the two weakest currencies right now are the Canadian dollar and the yen. So they're all the 8 major currencies, and this indicator shows you the strongest to the weakest. Now, you see these numbers over here? Anything above 60 is strong. So you can see that is coded in green. Anything that's below 40 is red, which means it's a weak currency. And between 40 to 60, it's yellow, which means it's not strong, it's not weak. So why is this important? Because at any moment in time, I want to be buying these green currencies, at the same time selling the red currencies. All right, so what are the various combination of pairs that we can focus on? Remember, you've got 8 major currencies, and if you to look at all the different permutations, there's about 49 pairs to look at. So using this currency meter, we can focus on the pairs that are likely to move the strongest in one direction, because you're pitching the strongest currencies with the weakest currencies. So obviously, for example, I like to be looking at the pound yen. I like to be buying the pound yen, because let me write this down. If I'm buying the pound yen, oops. If I'm going long on the pound yen, what does it mean? It means I'm buying the pound and I'm selling the yen, which is great because the pound is the strongest currency and the yen is the weakest currency. So by doing that, the chance of it going in my direction is very, very strong. Of course, there are no guarantees in life, but you want to be trading when the odds are in your favor, when you've got the strongest probability. Now, what you don't want to be doing is you don't want to be trading the euro pound. Okay, you don't want to be trading the euro pound. Why? Because both the pound and the euro are both strong. So if you buy the euro pound or you sell the euro pound, they're fighting with each other. It's going to go sideways, not going to go in a very good direction. At the same time, Canadian dollar and the yen are both very weak. So it doesn't make sense trading the Canadian yen. So whether you buy the Canadian yen or you sell the Canadian yen, all right, they are both weak, so it's not going to go very strong in one direction. Does it make sense? Okay, great. So what else can we focus on? We can focus on pound yen, pound Canadian, right? Pound Canadian. So again, for the pound Canadian, do you want to be buying or selling it? You want to be buying the pound Canadian, right? Because by buying the pound CAD, you are buying pound and you're selling Canadian dollars, which again is in line with the currency strength meter. What are the other combinations we can focus on would be Euro CAD and Euro Yen. All right, so let me write that down. You got Euro CAD and Euro Yen. All right, so you tell me, Euro CAD, do you want to go long or short the currency? You want to long the currency, right? Because if you go long on Euro CAD, it means you're buying euros, which is really strong, and you're selling Canadian dollars, which is really weak. So again, it's the stars align in your direction, right? How about euro yen? Okay, you want to long or short? That's right, long the euro yen, because again, you're buying euros, which is strong, you're selling yen, which is weak. So these are the pairs to focus on right now. Finally, we've got Aussie, which is strong as well. Aussie CAD, Aussie yen. Let me write it down. Aussie CAD. It's really hard to write with a mouse. Aussie CAD and Aussie yen. Okay, do you want to be going long or short the Aussie CAD? That's right, you want to be going long the Aussie CAD and long the Aussie yen. Why? Because again, it means you're buying Aussie, which is strong, selling Canadian, which is weak, buying Aussie, selling yen. So these are the 1, 2, 3. So focusing on 6 pairs is a lot easier than focusing on 49 pairs. I'm sure you agree with that, right? Now, of course, you don't just go and buy the Aussie CAD or buy the pound yen. You don't just do that. This just helps you to focus on these pairs. But when you focus on these pairs, what are you looking for? That's right, you're looking for the setup. The setup to take the trade. So again, you're looking for a retracement of the uptrend or retracement of the downtrend, or looking for a breakout or breakout and retracement. And then you use the technical analysis to help you to enter at the optimal point of these currency pairs. So at the same time, this currency meter allows me to see that which currency is weak or strong across all time frames. So you can see, yen is really weak. So on M15, you can see on M15, on H1, on H4, it is weak all the way, all right? And so this is definitely a pair that you want to be selling if you see the right setup, of course. And which is the other one that's strong across most time frames would be the pound. The pound is strong on M15, H1, H4. So definitely the pound yen is something we want to be focusing on right now. Okay, now here's the important part. So notice that what we're looking at right now, which is strong and weak, is based on the H1 time frame. So what I then do is I look at a lower time frame to look for the setups, to look for the retracements and the breakouts and so on and so forth. So I'm now going to drill down to the M15 time frame to look for setups. Okay, so let me just erase this. And let's go to M15. Alrighty then, let's go. Now, so let's take a look at the pound pairs first. So pound yen and pound CAD, right? So going to my pound pairs, and notice I've arranged everything in terms of the major currency. So pound, let's go to pound. So let's look at pound yen and pound CAD to see, is there a potential setup coming that we can look for? So pound yen and pound CAD. Okay, so pound yen and pound CAD. And again, I like to look at the 15-minute time frame, which is the lower time frame, to look for a setup. Okay, so right now I'm here on pound yen. And indeed, you can see pound yen is really, really strong right now. You can see that. Boom, all the way up. And right now there's no setup, so I gotta wait for a retracement, right? So you can see that it impulse, retrace, impulse. So I'm waiting for retracement to enter. So I'm gonna KIV this and watch this. The moment it retraces to a support level, Fibonacci level, I've got a good candlestick pattern that's bullish, like a bullish engulfing or a pin bar. I get in and it's gonna likely go up and hit my profit target. Okay, so let's keep that in view. Pound yen, I'm gonna watch that. Next, pound CAD. Oh, so yes, you can see that pound CAD is really strong as well, right? Wow, really, really strong, okay? But again, you have to look at the setup itself. And obviously, the setup is not one that I like to buy, okay? Why? Because you can see that there's a strong level of, that's right, you can see resistance. Okay, we've got a resistance level. So we can't buy it yet, but it's something that we can watch, okay? We are watching for breakout right now. So this could potentially be breaking out of this level of resistance. That's right. What I like to do is I like to wait for a breakout. Okay, now you can always buy the moment it breaks out. Some people do that, they buy the breakout, and it's a bit more aggressive. I tend to like to wait for the breakout and for it to retrace. Okay, retrace back to the support level. So resistance becomes support, right? Retrace to the support level, see some kind of a reversal pattern from a candlestick, like a bullish engulfing or pin bar, and then when it bounces back, boom, I'm in and I take the right all the way out. So I'm going to be watching this one as well, okay? So great, we have got two that we're watching, right? You can see that it attempted to break, now it's retracing back. So it's really risky to buy at the first breakout because the market likes to fake people. It's like in sports, they fake you out, right? So they fake you out, you buy, and they screw you back, right? So you're gonna wait for a really strong breakout, wait for retracement. Wait for retracement for it to find support again, and then you could enter on that. All right. So those are the pound pairs. Let's look at the euro pairs. Euro CAD, Euro Yen. Again, we're looking for a setup. All right, so we've got Euro CAD over here. And indeed, you can see that currently it's really strong, okay? There is a strong resistance at the 200 and looks like it just broke above the 200. But again, I like to wait for a retracement. Okay, so I'm going to watch for retracement of this pair as well. Euro Yen. Euro Yen was on a very clear downtrend, as you can see, and it has broken above this level of, or rather this trend line over there. Let me just mark in the trend line. Yeah, here we go. So you can see how this helps me to focus on the right pairs. So it's broken above this trend line. You can see there's a strong trend line over there. It is broken above that. Okay. So again, some traders would jump in and they'll enter on the breakout. I prefer to wait for it to go up a bit and to retrace to find some kind of support before entering there. All right, so let's take a look at an example of how we can use the currency meter to confirm the probability of a trade setup. So in this case, I'm looking at Aussie Canadian dollar on the M15 time frame, and it looks like there's a bounce setup which is forming, right? So you can see it's bouncing off the 50, bouncing off the 50, and going up, and looks like it's bouncing off the 50. So this could be a valid trade where we short at the 50 and we anticipate it's going to come back down again. All right, and we place a stop loss somewhere there, right? So this is a valid bounce trade. Now again, we could take that trade, or we can again look at the currency meter to see whether the currency meter is aligned with that, okay? So once again, if I'm trading on M15, if the setup is on M15, I like to look at H4, look at the higher time frame. So on the higher time frame, which is H1, what do I want to see? Okay, now again, I am thinking of selling Aussie CAD, right? Shorting, let me write this down. Shorting Aussie, CAD, right? So, which means I want Aussie CAD to go down. Now, if I want Aussie CAD to go down, that means I want the Aussie to be weak and the Canadian dollar to be strong. Okay, so on the currency meter, I want to see that the Canadian dollar is stronger than the Aussie dollar. So let me just take a look at it right now. For the last couple of minutes, you can see that on the H1 time frame, the Canadian dollar has now strengthened against the Aussie dollar. So now Canadian is at 43 and Aussie's at 34. So there's a stronger or there's a bigger differential between the two currencies. So in other words, if you look at it over here, or again on H1, you can see Aussie is now red and Canadian is now neutral, right? So there is a big enough difference right now. So which means that the Canadian dollar is definitely stronger than the Australian dollar. So we could sell the Aussie CAD right now, and that's why I just put in an order on the M15 to short it over here. All right. So remember, originally this was the bounce, okay, and it bounced at the 50. Originally, I did not take the trade because the strength meter was not aligned, but now it has become aligned. I have just shorted it. You can see this is my stop loss over there. This is my stop loss. This is my profit target, and this green line is my entry. So I'm in the trade. I'm looking for it to go down and hit my target price. So this is a good example of a case where it was not aligned and I waited for the meter to be aligned before I entered the trade. All right, so you see it's been a couple of minutes since we entered the trade over here. And again, our stop loss is there. That's our profit target. You can see it almost hit the profit target, missed by a few pips, but it's fine because the overall trend is still down, and in a couple of minutes it will hit the profit target. And so that's why it's really important to always look at the strength meter to help us to know when to enter the trade, the highest probability that is going to continue in our favor. In this case, continue going all the way down. All right, so great to know that I just received confirmation that my Aussie Canadian trade has hit the TP, take profit. So I thank the person for the call. You can see another person here also said, yes, me too, right? So this is a great thing about this community. In the advanced trading course, we call out trades and we verify them and we take our profits together. Now, I also like to take this opportunity to congratulate and to encourage some of my traders in my community who have been performing really well, and I do that in all my videos. So one of them is Eli Sabayev, I think that's how I pronounce his name, and he attended our course recently online from somewhere in the world. I'm not sure where he's from, and he said, I just want to share with you guys, since March till now, which is April, in 2 months, I managed to accumulate a total of 26% return on my initial amount. Finally, my performance has turned upward direction. 19% return for Forex, 7% for Guns. Guns is our gap up new scalp day trading strategy for stocks. So he trades both stocks and Forex. When finally I've got a positive return, feels like all the previous years of pain have paid off, right? You know, what people don't understand is that to be a successful trader, it's a journey you got to go through. And the trouble is, most people, when they start trading, they think, I'm going to learn it on my own. I don't need to take a course. I don't need to go for education. I can learn it by myself. And I tell people, of course you can do that. But the most expensive teacher in the world is Mr. Market. Because Mr. Market is going to punish you and take away all your money if you're not prepared with the right skills. And taking a course, whether from me or from other reputable coaches, is the best investment you can make because it's the cheapest teacher you can ever get. We teach you from our 20, 30 years of experience that you're going to learn in just a few months. So that's tremendous cutting short of your learning curve, right? And then we have got Edward Pang, who recently broke the record in my community for the fastest trade and profits, right? He managed to get $4,000 US profit in 2 minutes. That's 120 seconds during the news scalp strategy. Okay. Now, some people will think, $4,000 is no big deal. Now it's not about how much you make; it's how much you risk to get how much you make. So $4,000 is based on a 14.7 R return. What does R mean? R means the risk he's taking. So this means that he got 14.7 times his risk. So if you take $4,000, let me just do some math, divided by 14.7, his risk on the trade was $272, which means if it was a losing trade, and we can get losing trades, he would have lost $272, which is fine, okay? And so he made 14 times his risk. So there's no point making 4,000 if your risk was 4,000, or to make 4,000 if your risk was 8,000. What's important is the number of hours you accumulate. And that's why in trading, we talk about how many hours did you make. Next is Alex Sui, who is from Myanmar, all right, which is Burma, somewhere in Southeast Asia. He said, Adam, this is my testimonial. I've tried many trading systems, both free and paid. I was not getting consistent results. 3 months ago, I started learning and applying Adam strategies, right? Blah, 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 blah. My first month wasn't profitable, but I learned a lot of new things and had a great time interacting with other like-minded traders in the group. In my second month, I made a profit of 7.6R, which is about 7.6% if he's risking 1%. Even though I made some mistakes like closing up my trades out of fear, all right? But my third month, I managed to achieve a 10R in profit, which is 10% return. So I tell my students, don't go for 100% return a month. You know, there are people who can do that, but they blow up their account as well. I'd rather you get 5 to 10% returns a month, but consistently. So it's a consistent income you can generate for yourself as a professional trader, and you can build your account in a sustainable way. Then, you know, go big and die big. You know what I'm saying? Finally, I'd like to honor and congratulate Bagus Utomo from Indonesia. He actually attended my course more than 10 years ago. And over that time, he has learned to trade Forex, stocks, and options. And recently, I talked about him in my YouTube. All right, I said he made 75% return, and he said, no, this is not the latest, right? He said, thank you for your shocking YouTube video. I can forward to my wife, who does not believe in me trading and investing in stocks, all right? In fact, my wife also took up your program more than 5 years ago in sales and business, blah, blah, blah. Actually, my year-to-date portfolio is much better than 75%. From January to April this year, in 4 months, Bagus from Indonesia got a 135% return on his portfolio. And you can see this is his statement from Interactive Brokers, and it's a phenomenal return, right? But this guy has been with me for 10 years, and he has been practicing every single day. So you want to trade professionally, you want to get great results, you got to put in the work, you got to put in the hours. There's no free lunch in this world. So I like to honor my students, and I welcome you to join our community when you can, and to coach you to be, a consistent trader. May the markets be with you. Alright, so if you like this video, you can subscribe for more videos by clicking on the subscribe button. If you'd like to enroll in our professional Forex trading courses, you can go to piranhaprofits.com. For live training courses in Asia, do visit us at wealthacademyglobal.com. This is Adam Khoo, and may the markets be with you.